Hi, my name is Chris Lewison. This is my final project for CIS 9467, Business Modeling with Spreadsheets at Zicklin School of Business at Baruch College in New York City. I've chosen to create a dashboard that will leverage Solver to find the number of stocks in a four-stock portfolio in order to leverage the ROE and or the gross margin while constraining the portfolio to certain liquidity and solvency limits. As you can see here, this is my dashboard. I've got the four stocks we've just chosen at random. I've got IBM, Coach, Snapchat, Salesforce, and these are the latest prices off of Google Finance. Here I have existing holdings as if the portfolio owner has 1,000 shares of each with corresponding dollar value, and then the percentage of that portfolio by dollar value. Up here I've got the current portfolio value, which links to these dollar values here. And then in money to allocate, I've got 4 million, as if they're trying to add 4 million to the portfolio. Target holdings over here. This is the area that Solver is going to leverage to find for the highest ROE for the portfolio or the highest gross margin for the portfolio. And ultimately, this will be the percent of holdings for the target portfolio once Solver's done that. Over here, I've got shares to purchase. This will be the number of shares in addition to what the portfolio already holds that will have to be purchased in order to attain the target holdings that Solver's going to find for. As for constraints, we've got max stock weights over here. So these are the max weights that we'd like to hold in the portfolio. So as of right now, we have it set up that it won't solve for anything where IBM stock becomes higher than 60% of the portfolio, or Coach higher than 32% of the portfolio, or Snapchat at 22%, or Salesforce at 66%. And then over here we have some additional constraints, some liquidity and solvency constraints, where the debt to equity is set at 5 and the current ratio is set at 1. So that means that when Solver finds or creates this portfolio, it's going to create it so that the debt to equity of the portfolio doesn't exceed what's entered in here. And the current ratio will have to exceed or equal the current ratio, which is set here. All of these ratios are being calculated off of the income statement and balance sheet tabs that I've downloaded from the SEC. As you can see here, this is all the financial information for the four companies that ultimately this dashboard is using to calculate these ratios. So, as a refresher, I'll just point out that return on equity is equal to net income divided by shareholders' equity, and this ratio is of particular importance to stockholders because it explains the profits of the company by the amount of ownership that they have in the company. Gross profit margin is equal to revenues minus cost of goods sold divided by revenues, and this ratio explains how much of a company's sales or revenues are being consumed by the costs that are most closely associated with creating those sales. And this is often referred to as the first level of profitability. As for our constraints, we have the current ratio, which is current assets divided by current liabilities. This ratio looks at a company's short-term liquidity by comparing its short-term assets, such as receivables, cash, and securities, relative to what short-term liabilities it has. A higher ratio suggests that a company is better positioned to meet any liquidity needs, though for all of these ratios, normal ranges will vary by industry. As for solvency, we have debt to equity, which is total liabilities divided by shareholders' equity. And this ratio looks at a company's longer-term solvency. It looks at companies' long-term obligations, such as bonds and notes, in relation to the amount of equity that the company has. The lower ratios suggest that a company will have a better potential of making it through difficult or challenging financial scenarios. Going back to the dashboard, we can start with our first piece of VBA that's attached to this button here to refresh the prices. This actually links to an existing query that I built into the dashboard where it will query the most recent financial stock prices of these four stocks from Google Finance, and you can see that happen here. It brings up the tab prices, And these are existing queries that are querying stock prices and other information from Google Finance. And it hides the tab away, and it's updated our stock prices here, which also updates our existing holdings dollar value, weights, and current portfolio value. Moving on to the next button, this one will run the solver to find the max ROE of the portfolio by changing the number of shares of the target portfolio right here. So ultimately it seems as though it's buying quite a bit of IBM and a little bit of Salesforce, and that seems to be what it considers the way to maximize the ROE, which in this case, as listed down here, is 21%, and gross margin, which is it calculates the gross margin, which is 57%, the debt to equity ratio of 4.2, and a current ratio of 1.88. Now notice that the debt to equity ratio is below our upper limit over here of 5, as is the current ratio above our lower limit of 1 over here. So it's following our constraints that we've inputted over here. Also, you can note that the max stock weights have not been breached, although you can see that it's bought just up into the amount of IBM stock that we've allowed it to by entering this over here. Additionally, you can see over here in the shares to purchase that it's suggesting that we need to buy 20,436 shares of IBM above what we already hold in that security. We can click the reset button, which is some additional VBA to reset all the values to 0. Now we can also click this button over here, which is going to run a separate solver to max the gross margin of the portfolio. Now it tells us these are the shares that we would need to buy in order to maximize the gross margin for the entire portfolio. And you can see again we're still buying quite a bit of IBM and quite a bit of Salesforce. Not too much Snapchat or Coach, oddly enough. And you can see that while the debt to equity and current ratios have changed, they're still within our limits over here. And again, we're up into the threshold that we've set for IBM stock. And these are the shares that we need to buy in order to bring the portfolio up to this target holding. I have one last button here, and this is ultimately would link the purchases that we would need to buy, and it opens up an email as if we were to communicate whatever purchases we would need to make. And you can see that it's being sent to your broker with subject stocks to buy. So that concludes my presentation of my final for CIS 9467. I'd like to thank everybody for watching. I would say that I really like this project because it's given me the opportunity to do some things that I've always wondered about how you could possibly do in Excel. So I'm very appreciative of the opportunity to both learn those and put those into practice in this final project. Thank you again for watching. Have a great day.